Hello students, today we will learn about contract costing. So this is a definite 7-mark question in CMA. In CA syllabus there is no contract costing. It is very essential to understand why we do contract costing, why a different method is there for contracts. Let's start with the basics. So contract is an agreement between two or more parties for a consideration, correct? So there has to be a contractee and there has to be a contractor. Contractee is basically who gives the contract. Typically, it's government or big corporations who give contracts. And the contractor is who executes the contractor by putting his resources. So when I talk about resources, they are nothing but your material, manpower, overheads, all these. And contracts usually they are executed at a construction site and they are typically long duration projects. Because they are long duration projects, there has to be a separate contract account prepared to recognize how much profit should be taken to your income statement. So that is the whole purpose of preparing the contract account. In contracts, there is something called as work certified or work approved. So let's understand this with an example. Take a government has given a bridge construction contract to one of the contractor. So let's assume the contract price is 100 lakh. Okay. And the duration is 2 years. What happens in the first year? Not much of work is visible. So they will have to do site clearance, then they'll have to do digging, then they'll have to bring in plants and machinery, then they'll have to prepare the RCC structure. So all this initial work will happen in the first year. In the second year, they will erect all these pillars, then they install the beams, then they lay the roads. All these things will happen in the second year. But the contractor has incurred a lot of cost in the first year. So wherever there is a contract, in the contract document only, there would be written, if you do this much of work, I will certify so much of work. So that is called as work certified. There may be cases where the contractor has done work, but that work is not certified. So such amount is called as work uncertified. So these two put together is called as work in progress because it is not completed. It's not complete for sale. But the contractor has also received some money based on the work certified percentage. So using all of this, what you have to do, you have to prepare the contract account, then find the notional profit or loss. Then based on the rule, you transfer some amount of that to your P&L and then some to reserve. What are the rules of work completion and WIP? If the work completed is less than 25% of the contract, no notional profit will be recognized. So that means here it is 0. If reasonable work is completed, when I say reasonable, I will divide it into 2. Greater than 25% but less than half. In such case, 1/3 of the notional profit will be transferred. So this is first rule. If it is beyond 50% and within 90%, then you transfer 2/3 of the notional profit to your P&L. So the formula is given as notional profit into 1/3 into cash received over work certified. So this is collectively called as cash ratio. Whenever there is a contract happening, let's say the work certified is 40 lakh. The contractor will never get 40 lakh. He will get 35 lakh or 30 lakh and the balance is retained with the contractee. The main reason is the contractor should not run away taking the amount. So the work will be halted if the contractor runs away. So contractee, they retain this amount and that ratio is called as cash ratio. And the third is work almost completed. In that case, the estimated profit over completion of estimated profit into the work completion ratio is considered and that is transferred to the P&L. Here, what is notional profit? The notional profit is nothing but value of work certified minus cost of work certified. So we will understand this when we prepare a contract account. So now pause for a moment and read this problem statement. Hope you have read the question. Let us start. Kapoor Engineering Company undertakes long-term contract which involves fabrication of pre-stressed concrete block and the reaction of the same on consumer's life. The following information is supplied. Cost incurred. Fabrication cost to till date. You have direct material, direct labor, overhead and erection cost to date. So these are your cost till date. Contract price is 11,20,000. That is also given. Then cash received and work certified are given. So out of 1120, work of about 9 lakh is certified. Out of that 9 lakh, the contractee has given only 8 lakh. Means 1 lakh is retention amount. Technical estimate of work completed to date. Fabrication, direct material 70% is completed. So that means 30% is pending. Direct labor and overhead 80% and 75% are completed. That means 20 and 25% are pending, indirect labor and overhead. Erection is 25% complete. You are required to prepare a statement for submission to the management indicating the estimated profit on the completion of the contract and the estimated profit to date on the contract. So what this question is saying, so I started at a 0 date, then I progressed, this is my completion, this is my 100. I am somewhere at this point. So at this point, my work certified is 9 lakh and I still have to complete the balance. So the balance they have given 30%, 20 and 25% of direct labor overhead. Erection of another 75% is pending. So estimated profit on the completion of contract means you have to take this cost, then you have to project the balance cost, add both of them. That will give you estimated cost of completion. It's called ECTC. Then you have anyway contract price. So if you subtract that, you will get the estimated profit on completion. Estimated profit to date on the contract is calculated using the notional profit method. So this is how it will look. So material, labor, overhead, erection cost already incurred is given. Then they are extrapolated using the percentages given on to be incurred. When you add both of them, you will get total cost. When you add up all the total cost, you will get 8,06,250 and subtract this from the contract price, which is 11,20,000. You will get estimated profit on completion. So this is how you extrapolate the balance cost or the estimated cost to be incurred and then calculate estimated profit on completion. To calculate estimated profit till date, what I do, cost incurred till date I have, then I also have total estimated cost, which I got from the previous step. Based on these two, my percentage of work completion is 66.36%. So this falls in between 50% to 90%. If this is my percentage of completion range, I have to recognize 2/3 of the notional profit. So 2/3 of the notional profit, which is 3,13,750 into cash ratio. So cash ratio is 8/9. 8 lakh cash received, 9 lakh work certified. So this is cash over work certified. When I do all of that, on this date, profit to be recognized, I get as 1,85,926. So let's understand the pro forma of contract account, how to prepare the contract account. So preparing the contract account is very essential and it is very easy. So when you look at the structure, on the debit side, you have to consider whatever is putting into the contract. When I say putting into the contract, these are all your resources, material, then labor, and all other expenses like supervision, overhead, general overhead. If there are plants purchased, only the depreciation of the plant will be considered. So all of these are nothing but your costs. And on the credit side, whatever is going out of the contract. So by material returned or material destroyed, such things, basically you purchase local raw material, you use some, but then you will transfer some to other contract or it will be in the closing books. So all of that is not used in the contract, means they are going out of the contract. So they will be considered here in the credit side. Also by plant, if the plant is returned, so that value is recorded here. Two major items which are on the credit side is value of work certified, then the cost of uncertified work. So these two are called as WIP. These two are very important and you should know how to find out either value of certified work or cost of uncertified work if it is not given directly in the problem. Then if there are any escalations, so that escalation amount also is on the credit side. What is escalation? Since the contracts are long-term projects, I cannot for sure say in 2 years my material or labor cost is so much. So the contractor will say if there is an escalation in these material prices beyond some percentage, you have to compensate me. So such escalation clauses are written in the contract in detail. Either they will be tied up with some of the index like material index or inflation, and if it goes beyond that, then escalation clause will be effective and that amount will be credited on the credit side of the contract account. So let us see, with our understanding, let us try to solve this problem. A company of builders took a multi-storied structure for 50 lakh. So this is nothing but my contract price. My contract price has nothing to do in the contract account. It will not come anywhere in the contract account. Estimating the cost to be 40 to 80. So this is my cost at the beginning of the contract. So this is my estimated cost. At the end of the year, company had received 24,30,000 being 90% of the work certified. So that means I have to calculate my work certified. How do I calculate? If 90% is equal to 2430, then 100% work certified is how much? So I have to do cross multiplication to find out 27 lakh as my work certified amount. Where this will come? This will come on the credit side under WIP. Work done but not certified was 1,60,000. So 1,60,000 is cost of work uncertified. So this also will come on the credit side. Following expenditures were incurred: material, debit side; labor, debit side; plant. I will not consider the value of plant. I have to consider only the depreciation. So I will consider the depreciation of plant at 25%. That means 20,000 will be on the debit side. Material costing 20,000 were damaged. So any material returned or closing balance or damaged or sold, all of these things will come on the credit side. Prepare the contract account and show all the possible figures that can be reasonably be credited to P&L account. That means what they are asking, calculate notional profit. Then by what factor you have to multiply, whether 1/3 or 2/3, and multiply again by cash ratio. So cash ratio is directly given. 90% is the cash ratio. So that means 0.9. When you put all of this into the contract, you will see contract like this. So the balancing figure will be the notional profit on the debit side, which is 4.6 lakh. Then I have to check what is my completion. So contract is 50 lakh. Contract price is 50 lakh. Work certified is 27 lakh. When I take the ratio, I know this is more than 50%. As per my rule, I have to take notional profit and multiply with 2/3 and cash ratio. So I will take 4.6 lakh, multiply it with 2/3 and cash ratio. I will get P&L, which is 2.76 lakh. This will be transferred to the P&L account and the balance will go to reserve account. The reason why it goes to reserve account, because my project or my contract is not 100% complete. Tomorrow, if there is some escalation or something happens because of which I have to spend more, this reserve account will be used for that. So my notional profit will be recognized like this. So this was a simple problem. Similarly, we will see a problem with escalation. Nirvana undertook a contract of 60 lakh. This is my contract price on 1st April 21. Dates are very important because you have to calculate depreciation only for the duration the plant was there in the contract. On 31st March 22, when the accounts of the company were closed, the following detail about the contract were gathered. Material purchased. We are not interested in purchased. We are interested in the material used. So material purchased is 1.5, which will be on the debit side. Wages paid, debit side. General expenses, debit. Plant purchased. Again, we have to only calculate depreciation on the debit side. Material on hand. So this is on the credit side. I purchased 15 lakh worth of material. Out of that, 3 lakh were still in hand, closing balance. So only 12 lakh of material was used. Wages accrued. So accrued, I have to take it on the debit side. Work certified, directly given, good, credit side. Cash received will not come in the contractor's account. It will come in the contractee account, which as cash paid. Work uncertified, again comes on in the credit side. Depreciation of the plant directly given. So plant purchased, this information is to confuse us. Depreciation, directly I'll take it on the debit side. So far everything is straightforward. But there is an escalation clause, which says in the event of prices of materials and rates of wages increase by more than 5%, the contract price would be increased accordingly by 25% of the rise in the cost of material and wages beyond 5% in each case. It was found that since the date of signing the agreement, the price of material and wage rate increased by 25%. So I know this is very confusing. So I will simplify what they have told. Let us, for example, take material as 100 and wages as 10. Okay. So total is 110. What is they are saying? If through the contract, if this increases greater than 5%, so greater than 5% of 110, which means it becomes 115.5, then the escalation will come into picture. Okay. So that is first point. How much escalation will be paid? So in the same example, let's assume the material plus wages cumulatively it became 120. So in this case, up to 115.5, no escalation will be given. And remaining, how much is there? 4.5. Out of that 4.5, they would pay only 25% of that, which is 1.125. So this is what escalation clause says. So in this case, Since the date of signing the contract, the price of material and wage rate increased by 25%. That means in this account, the material and wages are already with an escalation of 25%. So that means I have to find out during the contract what was the price. When I solve for that, this problem is solved. So I have taken everything on the debit and credit side. Here, escalation I have to calculate using the working note. Actual material and labor incurred. So actual material is 15 lakh minus 3 lakh, which is 12 lakh. Then wages accrued 5.5. So total is 17.5 lakh. This amount is already with 25% increase in price. So that means I have to reduce it by 25%. I will get the original cost, which is 14 lakh. What the escalation clause says, up to 5% increase, there is no escalation. So up to 14.7 lakh, I don't get anything. Beyond that, the difference, I get only 25% of that. So the difference between 1470 and 1750 is 2,80,000. Out of that, I get 25%, which is 70,000 as escalation, which I have taken in the credit side. So once everything is there, my notional profit is the balancing figure. So 8,35,000 I get it as notional profit. Now I have to transfer it to P&L and reserve. This will be based on the work completion percentage. So my work certified is 25 lakh, contract price is 60 lakh. So my work certified percentage is around 41%. Means I have to recognize only 1/3 into cash ratio. I taught you about a simple contract and also a contract with notional profit calculation and escalation clause also. So these are pretty straightforward. You will be able to solve. What if you get contract account for 2 years? Generally contract problems you will understand when it is prepared for more than 1 year. That is the main agenda of creating a contract account. So this problem will teach you about preparing multi-year contract accounts. Omega Limited undertook a contract for construction of a building at a contract price of 45 lakh. During the first year, following amounts were spent, against which a sum of 1687 representing 90% of the work certified was received. So 90% of the work certified, using this data I have to calculate what is the actual work certified. So if I divide this by 90%, I will get certified work. Material used. So this is on the debit side, overhead expenses, debit side. During the second year, the contractor spent the following amount. So for the first year, I will calculate my contract account. So all material, wages, overhead will come on this side. There is no other information. So on the credit side, I have WIP, which is work certified. So when I do this, there is a notional profit, which is coming as a balancing figure. During the second year, the contractor spent the following amounts. Material used, wages paid, then again overhead expenses. This will be debit, debit and debit. But there will be an opening balance. So in the second year, what you have to do, you have to take WIP work certified or WIP work certified and cost of work uncertified, both of them on the debit side. And on the credit side, you should take the reserves. Out of notional profit, one will go to P&L and another will go to reserve, correct? So this has to be credited back to your contract account in the second year. That is the only difference when it is for more than 2 years. So with this information, the first year contract account looks like this. So notional profit is 5,25,000. Out of that, 1/3 is recognized for P&L and reserves is 3,67,500. So now pay attention to these two values. These two values come in the contract year, contract account second year. So WIP, so what I have done, WIP minus reserve I have directly taken. You can also take one on the debit side and one on the credit side. It has the same effect. Then usual material, wages, overhead. And on the credit side, on this year, the contract is getting completed. So I take contract sales. There is no WIP. It is like FG. So it is contract sales. Entire contract amount I recognize here. So that's it on the contract account. Hope it was clear. If you have any questions, if you did not understand any concepts, please leave your question in the comment section. I will answer it as early as possible. Thank you for watching. Good day.